Okay.
The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, welcome to this webinar about 5 fundamental points about dollar yen. The webinar is brought to you by OctaFX, an award-winning forex broker that has one of the lowest spreads in the industry. Before we begin, a bit of housekeeping, disclaimers. Risk disclaimer, trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer, all the information provided in this webinar is general market commentary and does not constitute investment advice. Okay, quick introduction about myself. My name is Yochai Olam. I'm a forex analyst. I used to be a computer programmer and a retail trader. I founded Forex Crunch back in 2008. And the site and also this webinar focuses on fundamental analysis, but of course there's always a touch of technical stuff. Okay, so today we're talking about dollar yen. We're talking about 5 fundamental topics. The yen is a safe haven currency. Correlations with stocks and bonds. Okay, so we get the bigger picture here. Why the dollar yen is the best for dollar reactions. On the other hand, why we should ignore Japanese figures, almost all of them. We'll discuss why and which ones, and why you should beware of interventions. This is the second webinar out of 6 about specific currency pairs. We already talked about euro dollar. You can watch a recording of that, and we had a general webinar about fundamental analysis. Okay, so today we're talking about dollar yen, and these are our 5 topics. Let's begin from the top. So, safe haven. What does a safe haven mean? Okay, let's look back into history and explain. Japan had low interest rates for decades, since the economic bubble in the housing and elsewhere burst in the beginning of the 1990s. Okay, nearly 30 years ago, Japan had very low interest rates. So you can lend money very cheaply in Japanese yen, okay? And this cheap money is looking for better investments, looking for higher yielding, better investments outside Japan. Again, when we're talking about Forex, we're talking about the carry trade. We're talking about lending in cheap yen and then buying higher yielding currencies, such as the Australian dollar, the New Zealand dollar, which had very, very high interest rates of about around 7-8% before the crisis. Okay? So this is why we had money moving from cheap lending to, riskier stuff, and it was the carry trade just earning interest until the crisis came. 2007-8, no more risk taking. So what happens? We have an undo, like you click Ctrl Z on your keyboard, money just went back to Japan. Okay, so money was repatriated back to Japan, went back home. Even though it was cheap, it was not risky. Okay, so the yen became a safe haven currency. Now, when you talk about Japanese yen, you should remember it's more the repatriation of money home when there is trouble. But it's not that Japan is free of debt. On the contrary, they have a debt GDP ratio of over 200%. Okay, worse than Greece, worse than Italy. But most of the debt is held at home by Japanese investors, by pension funds, and Japan is a safe and stable country. Okay? In general, the Japanese yen gains when we have times of trouble. Okay, money is repatriated back to Japan. It happened big time in the financial crisis, but the trouble can happen in Japan itself, like the terrible, terrible catastrophe 6 years ago with the tsunami and nuclear disaster in Fukushima, the earthquake, and money went back to Japan. Okay, and we have money coming back to Japan when things get worse, either in the global economy or with geopolitical events. They can be around Japan, like in North Korea. They can be around the Middle East. They can be around Brexit, everywhere. Okay, again, even if the trouble is in Japan, that's where it happens. And when things improve, the Japanese yen falls. Okay, so Bad times, money goes into to Japan. Good times, money goes out. Okay. A few other safe haven currencies, just a quick mention. The Swiss franc used to be a safe haven currency. Also, they have the image of the best secretive banks in the world, but because the S&P intervenes in markets, it's not that safe. Gold is sometimes seen as a safe haven. Doesn't always work that way. It's a bit more complicated. The US dollar is just occasionally, a safe haven currency. Most of the time, it isn't. So, all in all, the yen is the king of safe havens. Trouble, money goes into Japan. No trouble, money goes elsewhere. Okay, so that's a big driver of the Japanese yen, the safe haven status. Now let's talk about correlations with stocks and bonds. You'll hear it very often, and it works in many cases. Dollar yen is directly correlated to stocks. The stocks are S&P or the Nikkei. It also goes together with the safe haven status. When things improve, stocks go up, dollar yen goes up, sell off of the yen, right? Okay? Yeah, and usually stock markets go up or down together. Talking about the major indices in Japan, the Nikkei 225 and the S&P 500 in the US. When we have a fall in stocks, dollar yen falls as well. But again, it doesn't work all the time. It's not 100% correlation. With bonds, we do have a better correlation, and it's better correlated to US treasuries, 10-year treasuries, the global benchmark. Okay, they're better correlated with dollar yen. When bond yields are higher, when they reached a peak of 2.6% in the United States, then we had also a rally of dollar yen. When bond yields, 10-year treasuries go down, we have the other reaction. It works better when things are a bit more calm, when we don't have too much action in markets. You can see how these correlations are in play in a better manner. Again, going back to our first topic, safe haven, that has a priority. When you have big events, when things are not calm, the yen receives more attention, flows into Japan, and it beats the yields. Usually everything goes together, but when we have a conflict between things, we have more trouble in the world and rising US yields. Usually doesn't go hand in hand. The trouble beats the yields, and dollar yen falls, Japanese yen gains. Okay? To mention, we talked about stocks, how the Nikkei and S&P go together. When Japanese yields, not correlated to anything. They are fully controlled by the Bank of Japan. The Bank of Japan owns around 40%, owns 40% of Japanese debt, and their target is controlling the 10-year yield in Japan, the JGBs, to hold them at 0%. Okay, so the correlation is with US 10-year treasuries. Okay, now let's move on to our third topic here around dollar yen. Why it's the best dollar reaction. First of all, it eliminates the safe haven noise. Okay, because again, sometimes the US dollar is a safe haven, but it doesn't. But and you see all kinds of trouble. When in the crisis we had, for example, in times of trouble, the US dollar strengthened even if the economy in the US was going badly. With the yen, you don't have it. The yen the Japanese yen will usually or always rise with US dollar weakness. And the euro and the pound can fall on global worries. And other currency pairs are more influenced by the other part. So in dollar yen, because of, the next topic is that Japanese indicators have less of an impact, Japanese events have less of an impact. It's the focus is on the dollar. In the euro and in the pound, you can have changes in monetary policy in the UK or in Europe. You can have political stuff, crisis in the eurozone, Brexit that can influence the pound, and then the reaction to US events is not the best reaction. When we're talking about dollar yen and US events, they go hand in hand together. Okay? Yeah, that's what I mentioned. And in addition, it also provides the best reaction to political events. political events in the United States, which are now becoming more common. I mean, since the elections last year when Trump won, towards the elections. So dollar yen best reflects this. When things are looking better in the US, the American political scene, it's better for dollar yen. When Trump is in trouble, for example, things go wrong. We've seen that with the Comey memo. If you remember, one of the bigger breaking stories that was negative for Trump, we saw how dollar yen fell quite a bit. Safe haven status, reaction to a political event in the United States, correlated with stocks, correlated with bond yields. Okay? And also best reflects mixed Fed decisions. Now, the Federal Reserve, we have there 17 members, 10 voters, and they try not to move markets too much. They try not to be the center of attention, even though they have the biggest influence. Sometimes you have the Fed meeting minutes or the Fed decision itself, which has a very, very, very balanced message. Okay, so markets at the beginning, they don't know how to react. Eventually, some kind of a bias, some kind of a narrative appears. Okay, the Fed actually was more dovish. Actually, the Fed was more hawkish. We have analysts talking about that. And the best reaction to that, to understand where the wind is blowing, after a period of confusion, this period can be between 1 minute and full day sometimes, then you can see it in dollar yen. Okay? The verdict, the bias, the narrative is seen there. Okay. Now we talked so much about the United States. Let's look at Japan in the context of dollar yen and why we shouldn't ignore Japanese data. The unemployment rate, which is a key event in the United States, the jobs report, also in the UK, also in Europe, also in most of the world, it's just always low in Japan. It moves around 3%, and it never has an impact. Usually a key event in the rest of the world. Spending of consumers, it changes dramatically when you have a change in the taxes in Japan. Nothing is expected on the horizon anytime soon. Okay, so it also retail sales, huge event in the US, no impact in Japan. Surveys. The most important one is the Tankan survey, hardly any impact. Other surveys, the PMIs, consumer confidence, things like that, nothing. It's just years of experience. In watching the charts, you can see nothing happens. So what does matter in Japan? Okay, we do have some figures that matter. And we're talking about inflation. Like other central banks, the Bank of Japan has a target of inflation. Inflation remains very, very low. Now, there are many indicators there. The most important one is the one published by the Bank of Japan itself, which is a bit more flattering, a bit more positive, shows higher inflation, closer to their target. Okay, that's the most important one. The other one to watch is the Tokyo CPI, because it was released before the national one. So if you have the month of June ended just now, you'll have the Tokyo CPI coming for the month of June, and the national CPI is only for the month of May, so it's lagging behind. Okay, so inflation is important. National CPI still, Tokyo is more important, but the most important inflation figure is released by the bank itself. GDP, gross domestic product, the bottom line of the economy, important everywhere, right? But in Japan it's a bit different. Recessions in Japan are not uncommon. Even though we have recessions in Japan, the unemployment rate remains very low, and movements there are still shallow. So you can have 1 quarter of contraction in the economy, but no recession, or you have a recession but then a recovery. But all in all, the movements are not that big. Okay, and now our fifth and final element here, maybe we talked about the best reaction to US events, but now something negative about this currency pair. The Bank of Japan occasionally intervenes to weaken the yen. Okay, this happens. It's not that rare. It didn't happen for a long time. They're probably happy there in Tokyo with the level of dollar yen. It's not the yen is not too strong. They don't want a strong yen. A strong yen means that Japanese exports are less attractive, more expensive, and that inflation is falling. They haven't intervened in a long time, but it doesn't mean that they won't intervene. It is guided by the government. The Bank of Japan acts, but the government makes the decision. The Ministry of Finance, MOF, you'll see that sometimes. And before intervening, before actually selling the Japanese yen and buying dollars or buying other currencies, they try to talk the yen down. They try jawboning or verbal intervention. They just warn markets that they are not happy with the levels of the exchange rate, that they are not happy with volatility. When they talk about volatility, they are against volatility which goes in favor of the yen. Okay, they want volatility that weakens the yen. Okay, but these are code words that they use to try to say, oh, we are watching, we don't like it, we might intervene. Okay, and also this kind of verbal intervention, these comments by various advisors to the Prime Minister, Ministry of Finance, you'll see the headlines. They also have an impact, even though the Bank of Japan didn't sell 1 yen. Okay. The United States does not like this intervention. Now, we're currently in the Trump era, and he complains a lot about other countries getting better deals for themselves and bad for the US, but it's not new. Also, the Obama administration, also beforehand, each time that there was a small intervention to weaken the yen, the the American authorities said it is not fair, called foul. Okay. So sometimes these kind of interventions remain under the radar. Sometimes they try to talk the currency down, but if it doesn't work, they will not necessarily admit to it. They will not announce it. They will try to operate secretively to weaken the yen. Okay? So the Bank of Japan also is watching those big events. For instance, around the US elections, they didn't tell us they're unhappy with the level of the yen, but they just told us that they're watching for extreme movements. Of course, if the movements eventually were extreme in favor of the US dollar and to weaken the yen, they didn't complain. But they didn't want extreme movements against their desires. Okay? Only in one case, again we're turning to the disaster, we had a coordinated intervention. Ben Bernanke, which was then the head of the US Central Bank, the Federal Reserve, and other central bankers, they all held hands, if you wish, together and coordinated intervention to weaken the yen together with the Bank of Japan. Because it was such a big disaster, and despite this disaster, the Japanese yen strengthened a lot, then they worked together to weaken the yen to help the Japanese economy in times of trouble. Okay, so let's conclude these 5 fundamental points on dollar yen, the fundamental characteristics. The yen is a safe haven. When there's trouble, the yen rises. Okay, that's the biggest driver. Correlations, watch out for 10-year US yields. The higher they go, the higher dollar yen goes. There is a straightforward correlation there. 3, the best dollar yen is the best reaction for, you can see there, the best reaction for US events. Non-farm payrolls, Fed events, political events, retail sales, durable goods orders, you name it, the best reaction is in dollar yen. Now, we talked about ignoring Japanese figures, very few to watch, mostly inflation, a bit also GDP, but in general the driver is the US dollar, US events, and beware of the Bank of Japan. We haven't seen an intervention in a long time, but we always have this option open. Okay, so thank you very much. These have been the 5 fundamental points on dollar yen, the second in our series of talking about specific currencies and their specific characteristics, what moves them in fundamental analysis. You can also watch the longer webinar about fundamental analysis in general, trading the news in general. Okay, so thank you very much. You're welcome to join the regular updates, and see you soon. Safe trading. Thank you very much, and bye bye.